Welcome back to another live trading video. This one will be for my options trade for July 2018. Initially, I wanted to put in trades for last week. However, my analysis came back showing that there was no worthwhile setups to take. So I made the decision to wait one extra week, and now there are some setups that I can trade. The first pair on the trading list for today is going to be the British pound Swiss franc. Looking at the weekly chart as well as the daily chart and using simple support and resistance, my analysis tells me that within the next 4 weeks, price is most likely going to be ranging between 1.35 and 1.3. So these are the strike levels that I'm looking at. I'm going to be selling a call at 135 and selling a put at 130. And if price finishes within these two levels by the end of the next 4 weeks, then I would win the trade. I've got my trading platform, Saxo Trader 2, on the other screen. August 15th will be the expiration, which is the closest date that I can get 4 weeks into the future from today. We're going to be selling a call at 135. So here's the ticket. British pound, Swiss franc, 135 strike. Expiration is the 15th, that's correct. We want to go with cash. Just double checking that I've got everything correct. So that's the confirmation. Always. Let's call that one. Next would be selling a put at 130. So we've got 130 put, expiration correct, cash, and we're going to be selling it. That's my second trade. Next up would be USD Canadian dollar. This pair in my analysis is in a bullish market. Therefore, the only trade that I want to be putting on would be selling puts below current price. The furthest price away from current price that I could sell is actually at 1.28. So we've got USDCAD. This is why I put the trading platform on my other screen, because in vertical mode, in portrait mode, I can see a lot better than this. But I just want to show you. So August 15 put option. We're looking at this column here. 128 is the furthest that I can go. Ideally, I would have liked 127 or even 126, but as you can see, not available. So 128 is the furthest that I can go, and it's not worth a lot of money either. It's selling 50,000 units and I'm receiving $23.50 Canadian, which is a very small sum. However, the trade in the analysis is quite safe because it is, I'll move this out of the way, because it is in a bullish market, and to be able to sell a put at such far away from current price is very appealing, and therefore I'm going to be taking that trade. We'll cash 15 128. Trade number 3. Next would be USD Swiss franc. Now again, this pair in my analysis is in a bullish environment. Therefore, I'm only looking to sell puts below current price. I was thinking about actually selling a call at the highest price that I could find in the next 4 weeks, because looking at the weekly chart, I can see that previously this level here has held off and price has turned around. This time it didn't make as much of an impact, but it is still holding price off quite well. There is resistance here for buyers to push through. on the daily chart, it appears that this could be a reversal, meaning that resistance could be holding up. It may not, I don't know that. So for a while, I was thinking about actually selling a call at, I believe, 1.02 is the furthest that I would be able to do it. It was tempting to think that resistance will hold and in the next 4 weeks, buyers will not be able to push up, therefore 1.02 is safe. It's completely out of the picture. However, I then go back to my initial analysis and say that I make these trades based on what I can see on the weekly chart, not so much on the daily chart. And weekly chart has shown me, particularly from last week, that buyers have been very strong. So in a strong buying environment, I don't want to be going against that sentiment. Therefore, I'm not going to be selling a call up here. Instead, I will be selling a put at 0.98. So let's do that. So we've got USD Swiss franc, expiration August 15. We're going to go cash and we're going to be selling. The final pair that I will be trading for this month is USD Japanese yen. My analysis is telling me that this pair is currently in a bullish mode, and it's not difficult to see why that's the case. You can clearly see it on both the weekly chart and the daily chart. So selling put below market price is for me the most ideal situation to be trading. The furthest that I can trade is 110. So let me just put that up. I'll leave the ticket here. This is the furthest that I can sell a put at the moment, and I think it is quite safe, in my opinion anyway. You've got buyers breaking through what is the previous resistance level, and if it does come back down, there is a good chance that this resistance level could be turning into support. Could be is the key word. I don't know what will happen in the future, but based on what price is behaving, that is a possibility that I'm willing to make a bet on. Therefore, if there is resistance to be have around this area here, then my strike at 110 is technically quite safe. Therefore, I'm comfortable with making that trading decision. We're going to be selling strike at 110 USD Japanese yen, 15th of August expiration, and we're going to go cash. Take a screenshot of that. I just got a message from the trading platform, and I didn't realize what it was. I just found out what it is, so I just want to quickly show you. If you watched my previous live trading videos back in February, you would have noticed that back then I was trading with a lot smaller size, only 10,000 units, and many more trades. And then since March up until now, it has changed. I'm trading less number of pairs but bigger position size, and I talk about this in the previous video. It's not something that I decided, it's a condition that Saxo Trader has put on me. And one of the negative about such a condition is that if I have too many trades, in this case 5, margin utilization increases significantly. So with only 5 trades, I'm using 83% of my available margin. And it tells me that if in the future I can take 6 trades, I need to pick the best 5 out of 6, because with my trading account size, it won't be able to hold 6 simultaneous options trade based on what I'm doing. Of course, putting in more money into the account would always fix that. And that's something that I plan to do in the future. Once I get more experience doing what I'm doing, I need to be very careful. Otherwise, I could easily lose a lot of money. So this has been my live options trade for July 2018. I will make a video to review the outcomes of these trades. after expiration. So we'll see you again after 4 weeks. Bye for now.